Guys, what up? It's Wayne coming to you to bring you this long-awaited video I told you guys on Friday about. So basically, the video is going to go over how to find our levels to play for the day. I'll go over some stuff on riding the trend throughout the day and how I prepare in the morning, right? So basically, what I've been doing now, I would say for the last 2 weeks is I've been looking at the 15-minute chart. For the previous day, right? So this is the SPY. This was on Thursday. So I'll load up the 15-minute chart, and what I'm paying attention to is going to be the action for the pre-market right up until about 4 p.m., right? So this is TradingView. I'm using the replay feature on it. This is the data I want to see. And what I'm going to do is I'm going to chart out the rejection points and the bounce points for the day. All right, so here we go. We have the SPY rejecting this level over here. We have multiple wick outs right here, right? So that's very clear-cut resistance. We have some levels here that are getting wicked out, so you can kind of draw them however you base your levels, but I'll just put it there for the video's sake. And we have some bounce zones here, right? So kind of line those up there. And of course, you can't ignore this zone down here, which bounce extremely aggressively pre-market. So I will do this, right, either the night before or in the morning, and I'm looking at what's going on. So 15-minute on whatever ticker you're looking at, this is going to give you your levels, right? So very clearly, this is resistance, resistance, support, support, super strong support, right? So the next day, what you want to do is, obviously, you'll let the aftermarket play out. I'm not concentrating too much on the aftermarket because there's not a lot of liquidity behind it. So I really don't care what happens. There's going to be price spikes and contract fulfillments, which are going to send the price skyrocketing and lowering. So I'm not paying attention to that. What I am paying attention to is going to be pre-market, right? And I want to make sure that pre-market, my levels are being respected, which you can see this was Friday pre-market. The levels are being respected, right? So we'll change it up now to the 5-minute chart. So 5-minute chart, we're getting ready for open. It is 8:55. We'll let it play out a bit more. And here we go. 5 minutes before the open. So very clearly, this is an easy way to set up, right? So using the 15-minute candles from the previous day's session, we can use these levels that we marked off as kind of planning, right? What are we going to do? So above this is bullish, right? So you want to take calls on that, obviously. Below this is bearish. So that's it. It's that simple. So you kind of already have what your trend is going to be for the day. Above 394.14, we're pretty bullish. So you should be looking at more of the call side. Below 392.97, we're bearish. You want to start looking at puts, right? So that's basically how you're going to guide these levels. You can also write resistance 1, resistance 2. I tend to do that now, but it's a personal preference. So this is 5 minutes before the open. Open comes, we get this magnificent fake wick, which I think lasted like a minute, and then the real trend began, right? So immediately, SPY breaks down underneath its 392.97 support, which was holding all pre-market. This is already a sign of a bearish indication, right? Spikes up, spikes down, and we're just going kind of through the motions. We're chopping. This is where things will get interesting, right? So we're chopping, but we consistently are breaking below this support. And for the 15 minutes that passed here, it couldn't get above it, right? So it would kind of get above, flirt with it, but it couldn't close the deal above. This would have been your indication to take puts. We're literally not using anything else at the moment, right? We're literally looking at price action and levels. And these levels, we charted them out in like 2 seconds. For my mentees, the algo that we use, it'll give you these levels. It'll give you probably like an extra 2 levels of support and resistance. So I've been obviously using the algo ones, but for those who don't have the algo, very simple on how to chart it, right? So this is the SPY. We know how it played out. So couldn't get above that level, and the plunge began. If you look, the price action fell all the way to our second support. Again, this support we found due to the previous day's action, right? We had some chop here that couldn't get above. It finally did get back above. So these wick outs were substantial because here the SPY bounced, right? One bounce here, one bounce here, another bounce here. So that's how it played out. But again, couldn't really make anything too substantial about it, and we break that support. Again, we go to the other support level that we drew down. That support level we found again on the previous day's session, right? We try to bounce above, we fail, and we start falling. 385 was the 52-week low for the SPY that we set, I believe like a week ago, and we revisited it pre-market the day before. You can see an aggressive little bounce here because bulls feel confident that we're not going to break down from that. Their confidence is short-lived because we do break down from that. And then here, around here, we start building a new support. So we can kind of draw this here for the next session. And yeah, then we had a little chop action, and then we had the gamma squeeze that was caused by profit takers, right? So gamma squeeze due to all the puts and the short bets that were placed on the SPY. Very, very, very simplified, very easy. I kind of sped through the video, so if you guys have any questions, obviously ask them, but I'll go through I'm looking at AMC. I'm going to go through an AMC trade. I'm going to pick a random date and we'll look at it. Same thing, right? Same concept. So in the morning, obviously your pre-market levels usually align with the levels that we set from the previous day. You make your plan, right? So above this is bullish, below this is bearish. Literally, once we broke this and we couldn't reclaim it, it was puts all day. So yeah, here we'll go to AMC. I'll pick a random date for you guys. Let's see. Let's go back. Let's go back March 30th. I don't know if it gives me that. March 30th, perfect. All right, we're gonna go March 30th. No. We're gonna go March 30th, and then we're gonna replay. All right, we're gonna replay the action from the previous day, right up until 4 p.m. So forward it here. You guys can obviously do this using Webull, TD, whatever. I like TradingView because it's just what I use, and the replay feature is pretty neat, right? So again, all we're gonna do is we're gonna take the extreme points, right? The rejections. We got a rejection all the way up there. We got a bounce all the way down here. We have this zone here. You can draw a line there if you wanted to. We got these zones here that are chopping up, right? These wicks. Can't ignore these bounce zones around here. You can draw a line there. So I don't want to clutter the chart with too many lines, right? Because it kind of creates confusion. So these are the levels I'm going to draw on AMC. So obviously a strong rejection here. You can call that a scout wick, I would say. We got rejections here. Got bounces here, and below here we got a bounce here and a bounce here. And if you look at pre-market, 2762 was holding pre-market on March 29th. So with that said, we'll fast forward to the next day, right before open. And if you can see, right, our levels are being respected already. So all pre-market AMC was holding that level. We'll go to the 5-minute chart, kind of reset it here. So this is AMC going pre-market, right? The price action is a little crazy, so what you can do here, label this, right, above here. You can say partly bullish, right? Because if it bounces off of there, we know that the next stop is realistically probably going to be 30.71, right? And even this one, you can say partly bullish and below bearish, because the next level is one delta down, a whole dollar down. Whoops. So that'd be your plan right there, right? So your plan is, if we get above here and hold it and start moving up, obviously it's bullish. If we close below this, it's bearish because the next support isn't found for about $1. And let's see how AMC plays out. So that day, the open comes, right? Open is this ginormous candle. It tries to get above, fails to get above, starts wicking down. You already made your plan using the previous levels from the day before. You go bearish. Boom. AMC is just having a great time. If you notice where it bounces, it wicks down pretty far because AMC is known to be a volatile stock. But if you see where it kind of found its support, it's at that level that we drew from the day before on the 15, all right? We start moving up here. AMC has a pretty aggressive bounce, hits this level here, Wicks all the way up top here, fails to seal the deal, right? So it's not getting any action above that, and it starts heading back down. Again, what level was respected? It was the level that we found from the previous day. And we go through the motions, right? So we reject here, we bounce again on that level that we had, right? Here it tries to bounce and fails and breaks under that, so good. It's game time. We go bearish. We go even more bearish, because if you're playing the channel, you get puts up here when it rejects this multiple times. Here it has a few bounces, so obviously you would scale your profit out. Once it breaks down, you leave your runners to do their work, right? We start heading down. We don't quite get to our next target on this action here, but before the day is over, right for lunch, we do go below our target there, and AMC finishes below. Again, nothing special, no magic indicators, literally 15-minute levels we found from the previous day. You play them for the current day. It is literally that simple. I would welcome all you guys to simplify your trading. If you want to just, make some moves without overthinking stuff, literally 15-minute candles. Chart your levels based on the high and lows of the day, where the stocks chopped and found support, where they got resisted at. Literally mark those on the chart. Make a game plan in the morning. So above here bullish, below here bearish, and just trade. That's literally all I can say. Another thing to help you guys out is in the morning, if you guys are going to actively day trade, find yourself a strike list. I do it every morning. You want to look at whatever you're going to trade for the day, right? Say SPY, AMC, Apple, whatever. Find your strike prices, whatever's in your range, right? Whatever's comfortable. Find your strikes. That way, when the moves start happening, you don't got to start juggling through your phone and looking for, a contract or whatever. You have it already on a watch list, ready to go. All you got to do is pull the trigger. So that's another thing that's going to help you guys. And when it comes to riding the trend, so me personally, I use the EMAs, right? So as you can see, I got a whole bunch of stuff there. I do have my algo. My algo's built in, but I'll turn it off for the video's sake. I use Bollinger Bands. We'll turn that off for the video's sake. So my favorites that I use are going to be the EMA 5 and the EMA 12. I use these because for the most part, I found the most success when it comes to day trades with them. So these are the levels I'm using. Color code them however you want, right? So this is the 5. I'm going to turn my 5 purple because that's the color I do. And the 12 is going to be yellow. Those are the colors I have set on my album. So if you want to know when to get out of a trade or when to stay in the trade, ideally you're going to combine your EMAs with levels, right? So here, the trend was bearish from the get. The reason it was bearish from the get is price action is below the EMAs, meaning the trend is bearish. When price action is bouncing above the EMAs, that's a bullish trend. So we're already going into the mentality that AMC is pretty bearish on the day. AMC, obviously, the open candle comes, it tries to get above the EMAs and above our level. It fails. So we smack it, we take puts and we ride it down. Obviously, here we know this is a level that is going to bounce, so we can secure some profits here. And if you wanted to hold the trade to see if the EMAs are going to continue being resistance, you could. Here is where you would want to stop out, right? And on this candle sequence here, right? Because this candle here breaks above the EMAs. This candle goes back to try to break them and fails, meaning that the bearish trend for now is over, right? So now we're riding the EMAs, so now technically we're in a bullish trend. We hit our levels here. Bulls give up. So you can take puts here on this level rejection that we drew from the previous day, or if you want to wait for more confirmation, a breakdown of these EMAs here signify that there's a bearish trend and it's locked in, and we start riding the EMAs. Now, I still suffer from this problem daily. I'm pretty sure a lot of you guys do as well. A lot of us secure super early. Once we see some green, we get out, right? What you want to do is you want to look at the EMAs to tell you the story of the trend. So let's say we would have took puts here, right? Realistically, I probably would have took my profits on this green candle here or on this level bounce. But the EMAs are telling us the story. The bears are in full control. So we get these wicks that are trying to break through the EMAs, but they're failing. That means that the bearish trend is strong, right? So it's getting smacked, until finally we get a candle that breaks through the EMAs, and then this candle holds the EMAs as support. Now the bearish trend is fully broken, right? So instead of stopping out